Hey Nathan, thanks for jumping on today. So, follow up to last time's recording or call that we did. I'm super glad we talked about it because I ended up buying Bitcoin, and I was in pretty levered tech stocks in the last 2 days, and I've been hammered everywhere but Bitcoin. So I'm glad that we were able to get started.
Certainly. It was actually a big week for Bitcoin. Not only did you buy, we actually had a public company buy quite a meaningful amount of Bitcoin, and he actually put it on Twitter. So let me share my screen really quickly. This was kind of the talk of the town this week. MicroStrategy Incorporated. You can see my screen, correct?
Yeah.
Great. MicroStrategy Incorporated, NASDAQ, MSRTR ticker. Their CEO and founder, Mike Saylor. So now I'm on Twitter. You can see this, MicroStrategy chairman and CEO. Let's read this tweet real quick. On September 14, 2020, MicroStrategy completed its acquisition of around nearly 17,000 additional Bitcoin. So he'd already bought some for an aggregated purchase price of 175 million. So to date, they bought around 38,000 Bitcoin for about 425 million. So this is the first example of a public company who has a lot of checks and balances in what they spend their cash on and where they store their cash reserves, of making massive investments into Bitcoin and out of cash for a long-term investment. Additionally, he even goes into how we acquired it. So last time we talked about how should we buy our cryptocurrencies. And let's quickly read this tweet. To acquire this nearly 17,000 Bitcoin, they traded continuously for 74 hours, executing 88,000 trades around 0.19 BTC each 3 seconds. But in all the time, around $39,000 per BTC per minute. But all the times we were ready to purchase 30 to 50 million in a few seconds if they got lucky with a 1 to 2% downward spike. So that's a professional dollar cost averaging over about 74 hours. So with you saying that, you were purchasing, that was the big news this week, that we've now got a public company diversifying their cash holdings into Bitcoin.
Holy smokes. Hold on. So while you were actually doing that, I just looked up their quick balance sheet statement because, I didn't. Normally, this is very different than what most public companies do. I mean, most companies have like a treasury that they manage their own cash and they can park it in short-term securities or, investables, and then they deal with the accounting around that. But to park, how much was it again? Did you say 35 million or more?
They bought 175 million in the last 74 hours or earlier this week.
175 million. I am looking at the balance sheet right now, and as of basically year end last year, so December 31st, 2019, they had about $565 million worth of cash or cash equivalents on the balance sheet. So let's say, I don't know probably what's changed if they got financing or not, but regardless, that's just based off of those numbers. 565, 175, that's essentially a quarter, a little bit more than a quarter of their cash being parked into Bitcoin.
Yep. And then a lot of financially savvy people started looking at their investor documents. And it does list in their investor documents that the board and the executives do have or are planning to park their assets in alternative assets, and they actually list Bitcoin as one of those alternative assets. So they're letting investors know that we're going to diversify their cash holdings to alternative assets and Bitcoin specifically.
And I'm guessing it's because of their entry strategy, the dollar cost averaging, that there was a massive spike. Because I'm sure if you're dumping $175 million in the Bitcoin market, it's not liquid enough for the price to stay steady, right?
Yeah, people were shocked that the price didn't have a massive pump, and I think probably the DCA strategy helped it not go up. And of course, you and I always know that on the other side of every buyer, there's a seller. But people were surprised that it didn't have a bigger impact on the BTC price.
Well, that's actually an interesting testament, because that also, to me, what's telling me, it's like the liquidity pool for BTC is much deeper than initially, at least I have thought, right? For $175 million to be purchased, maybe it's over the process of 1 day, right? You said it was every few seconds.
Yeah, I think it was around 74 hours, so a couple of days.
Okay, a couple of days. Yeah, for you to move 175 million and keep the prices stable, that means the pool is deep enough that it can accommodate that type of transaction without really moving the markets.
Yeah,
I think.
To your point, I just looked it up. The 24-hour trading volume on Bitcoin right now is about $19.8 billion. Is that right?
That's a lot of money moving in and out. It's,
That is, that's $19.8 billion in the last 24-hour trading volume. So like you said, the liquidity pool is quite deep. One other point I wanted to note around corporate governance and, just a public company buying stocks. I think they mentioned, it was either Michael, the CEO, or somewhere in their investor docs that said it took about 6 months for them to convince the board and to convince pretty much all major stakeholders and investors that buying Bitcoin was a feasible strategy that wouldn't hurt the long-term outlook of the business and hurt, the stock price as well. So this is one of the more adventurous companies. Now, if another public company does this, I'm thinking it could take 6 to 9 months. Or yes, maybe a little longer than 6 months, maybe 9 months. So I bet other public companies are starting to think about this and planning their buys maybe in 2021. Because like you and I know, it takes time to convince your financial committee, your board of directors, and then of course, you and I, the stockholders.
And I think this, now that you're mentioning it, it makes perfect sense. I think there's a shift in narrative that we're seeing around Bitcoin as being more of an acceptable asset class. But at the same time, if we look at as crazy as it sounds, you have these Silicon Valley startups, right? Everyone has their own venture fund. Salesforce is for sure public, but you have companies that hit like their Series D or Series E, have enough cash, they've proven themselves to be a winner in the markets, and they're backed by what is essentially almost unlimited private funding at that point, and they carve out their own venture arms, which basically they're taking venture investment money and taking that money and investing it themselves into other startups, right? So isn't that just as risky as an asset class, if not more risky than Bitcoin? I am sure the volatility of investing in like a Series C or Series A startups is much larger than necessarily what Bitcoin has undergone over the last 2 years, right?
Exactly. And I'm shocked at, you just did the math quickly. You said it was about 25% of their cash reserves.
Yeah.
That's a meaningful investment to park.
Yeah. And a big part of me wonders, how much of it's like a hedge against what's potential inflation. But, anyways, we could talk a lot about this subject, but what I wanted to cover today before time gets away from us is, now that I'm looking at Bitcoin and I'm even thinking about Ethereum, what are some valuation principles that is there something that would help me to frame my mindset about my entry points? How do I know I'm getting a good deal, or am I just dollar cost averaging into infinity, right?
Certainly. So when I'm looking at the valuation of crypto organizations, most people, because it's so early, look at just technical analysis. So price and what's the market cap of the business. And let me share my screen really quickly. And we can always see that on CoinGecko, that's the leader in terms of looking at market prices. Now, we wanted to look at other indications. So we've got technical analysis. You and I could go down here, analyze the charts. We're looking at Ethereum. It's a smart contract platform. The cash tag is ETH. And you and I could look all day long at max charts. It's loading a little slowly. And you and I could look at resistance lines, and we could do a bunch of technical analysis. What I like to do for crypto organizations, and this is far more with venture-backed investing and also public stock investing, is fundamental analysis. So I want to see user data. I want to see products and services. Crypto is inherently software native, so I want to see code shipments and code shipping fast and updates to the products quickly. So a perfect example is Ethereum. They're probably a leader in terms of actual fundamental development of products. And I can show you that through another website called State of the Dapps. Now, DAPPS is simply a decentralized application. So Instagram's an application. People are coming up with decentralized applications called dApps. And if we come down here are the list of smart contract platforms, and you can see that Ethereum's at the top. And they have active live dApps. They've got 2,900 active live dApps that you and I could go and buy. Whether that's a website or if it's an iPhone app or an Android app, they have 29,000 of them that are live. And I'm sure most of them are pretty average, but a lot of them are quite good. And then we can start looking at daily active users. We can start looking at transaction volumes on the dApps, not just transactions volume for ETH, the native asset, Ether, excuse me, the native asset of the Ethereum blockchain. And then we can actually look at user data. So to answer your question, it's technical analysis, but with crypto organizations, the harder part is finding fundamental user data and actual products and services.
I think that makes sense. I mean, I guess a big part of why I've stayed away from crypto for so long has been I hadn't realized there's actually a fundamental side of things. To me, it was more, I saw crypto as more of a commodity where, you know, a commodity, there's not a lot of net reasons why price move outside of supply and demand. And that's where the traditionally the technical analysis really helps people to recharge, to understand the ebbs and flows of the supply and demand. But I think what you're saying totally does make sense. I'd love to, you know, I don't know, maybe next time actually dive into a little bit of how you do a fundamental analysis of each one. I think Ethereum would be great to start out with, mainly because, you know, I bought some Bitcoin. Now I'm thinking about, okay, here's, you know, let's diversify. I think it's always a good idea to diversify. So Ethereum might be what I'm looking at next. I would love to understand a little bit more of it before, you know, I feel confident putting more money into something like that.
Yeah, and to tie it back to the financial markets, it's a lot easier with SEC regulations when companies have to write 10Ks, write 10Qs, and you and I can actually go in there and read about some of the products and services that they're offering. So with crypto spaces, you don't really have that oversight, and it really leaves it up to the community to actually promote themselves through Twitter, through Discord, through community development. So it's a little harder to find that fundamental analysis, but I think that would be a good topic, a good little 10-minute video we can do in the future of how do we find fundamental analysis.
Yeah, that'd be great. I mean, I guess at this point, I haven't thought too much about the future allocations, but probably what I'm going to do is today is just going to dollar cost average some more Bitcoin, and we'll pick this up next time about Ethereum.
That sounds great. This is a good combo. Cool. See you next time.